Hey everybody, and welcome to the PlantStock channel. Today you're here with Mayur and me as always. And today we thought about focusing on the Q1 results for Beyond Meat yesterday, guys. So that's what's going to be our focus points today. And before we get into it, as always, would appreciate an early like. And if you haven't subscribed to the channel yet, make sure you do that. And if you want to be part of our free Discord channel, take a look down in the description. And remember, what we talk about here is just two friends talking about stocks that we're interested in. So do your own due diligence if you are interested in this company. All right, so let's move into it. So guys, we're trying something new here with the structure. So hope you find this interesting. So the company that we're going to talk about is obviously Beyond Meat, ticker BYND. And the period is obviously May in Q1 2022. And then the market cap right now, we had some question marks here because it's been going up and down. Before the market actually opened, it was down minus 27, 28%, and then that changed. So yeah, basically it's moving around, but it is below 2 billion at the moment anyways. So if we take a look at some headlines here, guys. So the revenue here was about 105.5 million, only up about 1.2% year over year if you compare it. And then Wall Street estimate was 111.6 million. So it was a bit of a miss there, about 2.1 million there. And then earnings per share here, guys, was a loss of 1.58 non-GAAP, of course, versus last year, which was a loss of 0.43. Yes, not looking good in that sense. And then Wall Street estimates here was actually only 98 cents, so a miss there as well. So anything you want to add here, Mayur?
Yeah, it was a tough quarter overall. The growth of the company was just 1.2% in terms of revenue. Now, some of that was most of that was due to discounting. So we did see that there was commentary that they talked about reductions in their price per pound or revenue per pound went down. But on a unit sales basis, they've been up 12% year over year. So that's good to see there. Yeah. However, some of that is, due to a new product launch, specifically the Beyond Jerky product. Overall comps are not looking that good. No. Because if you remove the jerky product, this is a company in decline. So they're, increasingly reliant on launching new products to continue to show growth.
Right.
But their core product, which is Beyond Beef, that's basically been their, big bet into tapping into the $1.2 trillion global meat industry. That product is in decline. Velocity is in decline, and just overall revenues are in decline as well for that.
Yeah. All right.
So it's not good overall, and that's what led to the miss on earnings per share from a net profitability standpoint, because of the cost of launching this new product, which isn't fully ramped yet. They focused on just getting the product out as quickly as possible in very high numbers, and they did that at any cost. So they're kind of putting margins aside for now in order to get products to market as quickly as possible.
All right. And we'll talk more about that as we move on, some more details on that. But we take a quick look at the actual financials here. So the gross margin, only about 0.2%. We'll talk more about that. Operating margin, a loss about 89.1%. And their current debt is about 1.13 billion. And then we have the free cash flow is a loss about almost 190 million there. And net income about 100 million in loss as well. And when it comes to cash, guys, we'll take a look here. That's about 550 million. And that cash, guys, that's part of the debt. So that's important to remember, right? Or what do you say about that, Mayur?
Yeah, so if you recall, this was from back in February 2021. They issued a big convertible bond offering. It was a $1.1 billion bond offering. So that was where they raised a ton of capital. And so they've burned about half of that. So they're down to about 547 million in cash as of Q1. Again, this is all due to this launch of the Beyond Jerky product. That's what led to this 0.2% gross margin. They did mention on the call that the jerky product itself contributed to a 940 basis point loss in gross margins. So this is it's kind of an unprecedented product in their history because they've never launched a product this rapidly before. As per the what they talked about on the call, Beyond Jerky is now in 56,000 locations now across the U.S. 56,000. They've never had a product that has ramped that quickly in their entire history.
Yeah.
So they relied on external, co-manufacturing. This is what it has been an ongoing, discussion from Q4 as well. They're reliant on co-manufacturers because they don't have the facilities required to launch, products at this scale. So they had to, in order to get the product out to market as quickly as possible to capture the opportunity, they had to rely on a high-cost third-party manufacturer to do it.
Yeah.
So that's what led to this basically 0% gross margins for the quarter. It was almost entirely due to Beyond Jerky. So that's, one reason why they also had a very big cash burn. So they had about roughly $190 million of free cash flow burn for the quarter. So that's very eyebrow raising because that's, they're rapidly running out of cash.
Yeah.
But there are some bright points out of this because some of that is not going to repeat in Q2 onwards. So they did guide for improving gross margins throughout the rest of the year as they get some fixed cost absorption back. They're also announced that they're actually going to rely on another third-party manufacturer who runs a fairly autonomous factory to produce the Beyond Jerky. So this to me is actually interesting. If Beyond just simply wants to be the R&D leader, and they're the ones that own the IP, and they basically outsource high volume manufacturing to somebody else who can do it for cheap. That's actually a perfectly good business model. Remember, Apple has done this for years. They don't manufacture the majority of their iPhone, right? They make their chips, but most of their manufacturing is outsourced to Foxconn, right? So this is not a bad business model at all. If Beyond Meat I think it's actually a great thing. If they want to just focus on R&D to make the best, to design the best products, and then have a third-party manufacturer that's already set up, for manufacturing, doesn't require a ton of, ramp-up costs and other startup costs. That could be a great way for them to get better gross margins. Now, they may have to part ways a little bit better operating margins, but they may have to part ways a little bit with gross margins. But that's not a bad thing at all. No. For a company like Beyond Meat that just wants to ramp up, as fast as possible, this might be a good thing to do. So they did talk about gross margins improving throughout the rest of the year as they ramp this autonomous factory up by a third-party partner for Beyond Jerky product.
Yeah.
And that's supposed to hit by mid Q3 of this year, 2022.
Yeah. So you also wanted to take a look at we talked about the retail and food service, how they've been doing in the U.S. and internationally. In the U.S., they've been up about, I think, about 6 to 7%, right?
Yeah, so this is also good to see here. Remember, this is how we get awareness out, brand awareness out. The more the number of TDPs that you're located in, that's total distribution points, the more your product is in front of more people. So they talked about this where the Beyond Jerky currently is in 56,000 locations, right? And by the end of this month, it'll be at 80,000 locations. So that's huge, right? This is the value that Pepsi brings to the partnership. They've never been able to get into this many distribution points on their own,
yeah,
right? This quickly. So Pepsi is the one that's leading this charge. which is their partner for Beyond Jerky. So, I think that it's actually not a bad thing. I would love to see where this ends up. If they can just get rid of the complexity of manufacturing and just focus on being the person, the ones in charge of R&D, the ones who owns all the IP and just simply has somebody else manufacture it, that could be a great business model. You don't have to manufacture everything yourself. Plenty of companies own the IP and own the brand equity, and just go to somebody else to deal with the manufacturing. And Apple, again, is the biggest example of that. So you think Apple can't manufacture their iPhones themselves? Of course they can. But they would rather focus on what they do best, which is R&D, right? Building the best product, designing the best product, and then having someone else actually build it.
Yeah. And then what we've counted on this before also, that what they mentioned, what kind of numbers we could expect in the US. And I think we're up to that there's a possibility that we could see them at about 170,000 locations, right? So we might actually see another 100,000 in the coming year.
Yeah, exactly. Yeah, so this is very, very bullish for at least their Beyond Jerky product itself.
Yeah.
They also did talk about their chicken product, right, which is their the chicken tenders. That is at 56. That's at 15,000 distribution points.
Yeah.
For Beyond Chicken, 15,000. So that's including all of the like CVS, Walgreens, Rite Aid, and others like that.
Yeah.
So those are the types of retail locations that Beyond Meat really needs to get into, because that's beyond the grocery store.
Yeah.
And it's also beyond restaurants, because right now restaurants are still very limited in terms of locations. But the big volume driver would be all of the tens of thousands, hundreds of thousands of small retail locations like CVS and Walgreens and Rite Aid and gas stations. There's many, many more locations of those than there are, grocery stores, and even Walmarts for that matter.
Yeah.
So that's very, very important for Beyond Meat to get maximum exposure, is to get into those locations, which are scattered all throughout the entire country, at every corner of the country. So
if we move on to the commentary here, some things that we actually learned from the conference call here. So again, U.S. retail went up plus about 7%. But minus 3.3% on comparable basis, excluding jerky, versus plus 2.8% for the plant category. So again, when it comes to the category of jerky, they're basically ruling that part at the moment.
Yeah, so jerky has been the bright spot for, in terms of revenue growth for Beyond Meat, but it's not looking good on retail. This is something I've been talking about. I believe retail is where the key lies with regards to whether consumers are adopting plant-based meats or not. And although it rose 7% for the quarter year over year, it's not directly comparable because that includes Beyond Jerky sales, and Beyond Jerky simply wasn't available a year ago, so you can't really compare that in terms of growth. So on a comparable basis, they're still declining, So this is why this is very, very discouraging right now for Beyond Meat, because they had a 20% decline in Q4 year over year. And I guess that slowed a little bit to minus 3.3% this quarter. But retail needs to stop declining. It needs to be at least stable, at the very least. Especially for a company that is priced the way it's at, even today, despite the fact that the stock price is down a lot. It still trades at almost 20 times trailing gross profit, right? And that's a very high valuation for a company that's basically, declining in revenue of its core product, which is Beyond Beef.
Yeah, there were some interesting questions from the analysts, and there were several was actually harder and quite harsh, more than I've seen so far during these last couple of years. And they had some good questions, actually fair questions, I would say, that because we understand in Europe, they are actually cutting prices, I'm not sure that they're that close to meat right now, but they're still cheaper than it used to be, and which is very good. And it's actually getting better in the US as well. But like one of the analysts said, is that, well, that's good, if you want to reach price parity. But what's the point when you're crushing your margins right now, right? And that's what's happening. And the interesting thing is also that even though in the US is also, even though the prices are getting better, it's still not selling more. So that's something that I think we both are worrying about.
Yeah, that's the big worry right now, is that despite the fact that prices have come down, remember Phil, the CFO, actually did state that the revenue per pound had come down this quarter, and that's the reason why total revenue only grew by 1% this quarter.
Yeah.
So these declining prices are not yet translating into higher sales for Beyond Beef, right? So again, the jerky is a great bright spot for the company right now. But even with jerky, it remains to be seen how long this growth rate will continue, because this typically happens, right? Beyond Meat launches a new product. It generates a bunch of buzz and excitement, and then that excitement kind of dies down over time.
Yeah.
Right? Remember, they had huge growth in 2018 and 2019, and then even better growth in 2020, partially because of the lockdowns. But since then, it's really fizzled, right? And it's now went into contraction mode.
Yeah.
So this number needs to turn around. Otherwise, it's difficult to see the long-term potential of this product. I believe in this company and the fact that the product is actually really, really good. So I do think that these numbers will turn around.
Yeah.
But as of right now, we don't have any evidence of that happening.
But yeah, true. But one thing that which could seem as hard to believe is that Ethan is still talking about that it's going to improve and it's going to be much stronger margins, at least about 30% long-term gross margins. What do you see when reality-wise there?
I tend to believe him a little bit. I don't think that they're going to get back to 30% in any time soon. But it's easy to say that when you're basically at 0%. So of course you're going to get better from 0% gross margins, right?
Yeah.
It remains to be seen, and that's why I'm actually very, very confused why the stock is up, because this result is not good.
Yeah.
It's not good on margins, but look, we can forget about margins if there's strong growth. Right? If they can come out and say, look, there is a huge opportunity and we wanted to jump on it, aggressively. And because of that, look at our revenue growth, 20%, 30%, right? Oatly, for example, is guiding for almost 40% growth year over year, right? That's real growth. So if Oatly started to show really weak margins, which they did, not as bad as Beyond Meat, but they still showed low gross margins, that at least can be understood because and excused because there's huge growth that's backing it up.
Yeah.
With Beyond Meat, we have bad margins and bad growth. You can't have both and continue to justify, high valuations in your stock price.
Exactly.
It's just, you can't do that. So we have to sit back and say, well, what's the risk reward right now?
Yeah.
I don't think it's a very good risk reward.
Well, according to Ethan, anyways, he said on the call that their focus is still on actually getting that revenue number higher and higher, and like we've shown here that they're hoping to improve gross margins now in the rest of the year, and he stated, and the team stated that they're probably Q2 revenue-wise is going to be much stronger, and they're basing that on that last year Q2. That's barbecue season, right? It's this summertime. So they had about, I think, $143 million in sales, which was by far the best quarter they've ever had. And now Wall Street is actually expecting about, I think, 164 million. So that will be actually the best by 20 million there too. So hopefully, if their sales actually skyrocket that way, that will improve the margins now during the rest of the year to some extent, right?
Yeah, it'll definitely improve the margins, but again, the year-over-year comps are going to be down, which they
Yeah,
admitted on the call,
yeah,
right? So it'll definitely improve from Q1, but that's a very low bar to be set,
hmm,
because we're at basically $190 million cash burn for the quarter.
yeah,
So it's so bad that it can only get better from here. But that's really not a good benchmark to set
yeah,
because again, the stock is still trading at a premium valuation,
yeah,
which I'm still really impressed by. Relative to Oatly, the valuation of of Beyond Meat is basically twice that, almost.
hmm,
There's a table that I put out. I posted it to the Discord yesterday, and it showed that Beyond Meat is trading at 19 times enterprise value to gross profit. Oatly is down to 11, so it's almost half of what Beyond Meat is worth, and yet Oatly has significantly better revenue growth than Beyond Meat,
yeah,
and better margins. So we'll see. But they did reiterate the full year guidance, though. If you wanted to go to
yeah, yep,
that slide, which is kind of one of the big takeaways for the year,
hmm,
is that they did come out and reiterate their full year guidance of 560 to 620 million.
hmm,
That's 20 to 33% growth year over year, which is good, which is definitely good to see. But I still question as to how much of that is due to the jerky product, right? If we remove jerky, what's their actual growth, right? And right now, it's negative for Beyond Beef, right? So jerky is not that $1 trillion market opportunity. The beef product is.
yeah,
Jerky is still a big opportunity nonetheless. It's I think around 4 billion in global revenue. Um, so it's still huge, right? But that's not where the vast majority of their growth or their long term opportunity is going to come from.
exactly. So with this said, would you say at this moment, even though it's not financial advice, would you say it's a buy at this moment?
I would not. No,
No.
I'm not a buyer at this, even at this level.
No.
In fact, the stock is up on this news after being down like 20% in the after hours and in the pre-market this morning.
Yeah.
So this is absolutely insanity. I'm guessing it's because of short covering. That's what this most likely is. And if that's the case, then it's not going to last for very long.
Well, also the news today, was it the PPI was out today, right?
Yeah, the PPI was out today, so it's kind of confirming that inflation is here to stay for longer.
Hmm.
Now there was a tidbit that they did give that they did find another supplier of pea protein,
Hmm.
and that was a cheaper supplier, so that may help with gross margins a little bit.
Yeah.
So that is good to see
Yeah.
for Beyond Meat. But again, I love the fact that they're guiding for strong growth this year at 20-30%. But again, we have to look at it in terms of are they achieving this growth simply because they're just launching new products over and over,
Yeah.
and the old products are kind of decaying, right? Because you can do that. Like they could next year launch Beyond Milk, for example, and that will tap into this exciting growth category within plant-based milks, and they could once again show 20% growth year over year because of that.
Yeah.
But what if beef and jerky are in decline by then? So this is not what you want to see for a growth company, right? Especially for if you're still not even at 1% market share. You're nowhere near even 0.5% market share in terms of how much you have in the global protein industry,
Yeah.
and yet your product is in decline. So that's why I take this with caution. That even though they're guiding for strong revenue growth, it's on very poor margins and deteriorating margins,
Yeah.
and it's on a core product that is waning in growth.
Yeah. In their defense, I would say, and I think both me and Mayor, who used to be like really bullish on the company, probably not that much anymore at this moment. Even though I think we're all really rooting for the company. For me, it's actually one of my absolute favorite companies. I love the product. I love their mission. One of the most important ones out there. And Ethan Brown, also love what he's doing and his energy. But right now, obviously, a lot to worry about. But I keep thinking, to some extent, not to give it excuses, considering what's going on in the world right now. People are afraid of the war actually going to get more worse. Inflation is high. Uh, so for me, that means that a lot of people are worried out there, right? And I'm thinking maybe that's not the time when people start trying something new, because Beyond Meat need new customers, right? They need to expand to more people, not only loyal customers. So for me, that might not be a very big thing or big part of it, but I think it's definitely a part of it if we have some form of nuanced perspective.
Yeah, and I mean, look, I think the company will actually end up succeeding, right? But again, it's this is not a company, this is not a call on the company failing. This is a call on the stock valuation.
Yeah.
Right? At 20 times gross profit, it's trading at a very rich valuation. And, I'd get much more bullish now if it got significantly lower than that, closer to where Oatly trades at 10 times gross profit. So that could be another 50% decline from here. So if I were Beyond Meat, I would take a look at where my stock is trading at in terms of its price multiple and be like, look, we're still trading at a premium valuation to many of these other companies. Right now, Teladoc is trading at 1/4 of the valuation that Beyond Meat is at in terms of their multiple, right? There's other companies out there right now that have much better gross margins, 40 to 50% gross margins, and they're trading at much cheaper multiples than Beyond Meat is.
Yeah.
So if I were management, I would say that, look, we're still being given the benefit of the doubt. Our stock price is up today, despite one of the worst quarters ever in our entire history, probably the worst quarter. And our cash is now low. I would be on the phones with the bankers to work on an equity offering.
Yeah.
I would be raising cash right now if I were Beyond Meat. It didn't sound like they want to do that on the call.
No.
It sounded like they may wait till the end of the year when they start to show and prove to investors that their cash burn will decline.
Yeah.
And if they do, maybe they think that they can get a better price than today.
Yeah.
But I think that's a little risky. Maybe they can wait a quarter or two, maybe at most, but I would really do that by the time you report your third quarter results. I wouldn't wait much longer than that, because if you're not improving by Q3 this year, I just don't see that. I just don't see this current price holding up.
Yeah.
That's all.
All right, guys, there you had it. It's actually going to be an interesting couple of months, because when Q2 comes up, it will be interesting to see if they actually do reach those kind of numbers, as around 160 to 165 million dollars. Obviously, that would be quite bullish at this time, and could be related to, again, people being free and barbecue season. So, but hoping that we could see those margins improving more and more. So, but yeah, time will tell. And obviously, even though not that bullish today, guys, still, we're going to keep monitoring this company. We're still rooting for this company. So, as always, if you want to follow us, subscribe to the channel, give us a like, and join our free Discord channel. We talk about this company on a daily basis, guys. So you get to meet me and Mayor. All right, guys, thank you for today, and see you soon. Thank you, Mayor. Peace out.